No matter your age, your plan for retirement can start today. From the News Channel 5 Network, this is the Retirement Report.
Good morning. Welcome to the Retirement Report. I'm Hank Parrott, your host. All right, guess what just happened? We have a new tax law. It's going into effect. How's it going to affect us for this year? Well, for this year, for 2017, everything's going to, of course, stay the same. So this is going to be for 2018, how the tax law is going to change things going forward for this tax reform. What it's going to do as far as the deductions, what it's going to do as far as the standard deduction versus itemizing. We're going to be talking about the impact. There's been a lot of talk in the news, of course, about and back and forth, and I get people calling and asking about the new tax law and how it's going to affect you, how it's going to affect them, I should say. So here's what we're looking at. The standard deduction is one of those that's been the standard deduction has been almost doubled, and we're going to talk about what those limits are and what it amounts to for each individual. Because when you file your taxes, you have a standard deduction, and then you have those that are able to itemize because they have expenses that they're able to deduct in terms of their taxes. So that itemized deduction, for those that were able to itemize, fewer people will have to or will be able to itemize, but that's because they really aren't going to have to because of the new higher deduction. Now, the thing that's been done away with, though, is the exemption piece, and how does that play in is going to depend on your own individual tax situation. We're going to talk about that a little bit. In addition to the new brackets that have come out. For most people, does look like it'll be a decrease in taxes because your 10% bracket stays. The 15% has been reduced to 12. The 25 has been reduced to 22. And we're going to go through each of the brackets and talk about the impact. And then on an individual situation, we'll use some cases on there to kind of get a handle on that. The other part of it is some of the other things like the capital gains. This is one up until I've been wanting to see, and we just finally got some news on capital gains taxes and how that's going to be affected. New child tax credits. There's going to be, and here's some things to get lined up. Temporary reduction in medical expense deduction floor. And this is going to be for both this year, 2017, as well as 2018. So I don't know if there's any last minute things going on that one, but that's something to keep in mind when it comes to itemizing. 529 accounts, limitation on deduction for state and local taxes, qualified interest on mortgages. And then, of course, there's some more on the individual side, and then we get into the business part. And this is one of the things that's gotten the most news, of course, is how it's going to affect corporations. Now, to help me go over all that today, I have my good friend and special guest, Dr. Friday, with Dr. Friday's Tax and Financial Services in Brentwood, Tennessee. Friday's, she's a specialist when it comes to helping people with tax problems, but also for those small business owners out there, this is going to be one that's going to, in particular, have some potential major effects on you. And you're going to want to understand how you may restructure your finances going, and even your business structure in terms of how you pay yourself, what you're able to do there. This is one of the things we're kind of getting our heads around a little bit and thinking that there may be a way, in fact, that we can reduce our taxes considerably through the way that we've got our business structure so we can take advantage of these new tax laws with regard to pass-through entities and the like. So, I mean, are you getting a lot of calls, I imagine, as well, right?
Oh, it's getting crazy, yeah. And everyone's wanting, just like you said, how's this going to affect me? How am I going to be able to save? Am I going to save? Or is this really going to cost me more? Because there was, especially before the bill passed, there's been a lot of conversation on it's really only for the rich, the people in the middle or lower are going to end up paying more taxes and all these different things, right? So I think a lot of that myth may have been stopped, but everyone's looking at what's it going to do for me. It's all about, at this point, it's all about me. How am I going to get something from this new tax bill? And I think there's a little for everybody in this tax bill, to be quite honest. So kind of excited.
Yeah, this is one of the things. And when it comes to taxes, one of the things, of course, too, is it's how when we're looking at individual taxes, when it comes to tax planning, we're going to go into a lot of the general stuff and how the rules are changing and what that amounts to this morning. But understand, too, for your individual situation, the best thing is to sit down with your tax advisor, and if you don't have one, we're going to make it easy for you, okay? So if you're doing your own taxes, this might be a time when you might want to suspend that for a year or two and try, in particular with these new rules, because it's not just about plugging the right numbers into the right boxes, right? As I've said, that's one way to keep you out of the big box with the bars on the windows, but if you want to reduce your taxes, if you want to have some tax strategies, as I was just mentioning with regard to small business owners, some things that can be employed there that could potentially save, it looks like maybe even 10% on that tax rate. That, now, to be clear, when I say save 10% on taxes, I'm saying that would we might rephrase that, okay? I'm not talking about save 10% on your tax bill. I'm talking about a reduction that could be as much as 30 or 40% of your tax bill.
Right.
All right. So this is we're going to talk about that. That could be huge savings, and for small business owner, this is of course what the whole thing's about. All right. Now for individuals though, you're going to be also there's some strategies when it comes to, we've taught you strategies in a passive, maybe itemizing every other year, so you can double up on your deduction, or excuse me, on things you pay like your property tax bill or charitable contributions. So you double up and pay them in 1 year for what you would normally pay over 2 years, so that you can itemize every other year and have some tax savings. We're going to see if that strategy will still hold up as well. So if you'd like to see for your individual situation though, all you need to do is be one of the first 10 callers to my office this morning. It's 615-376-5325. Tessa's standing by to get your information. She'll send you out a checklist of things to bring to your appointment with me, and we can have Friday there for you as well. But again, get on that one quick though, because with tax season coming on, it's going to get harder and harder to do.
Yep.
But if you'd like to get into your own specific situation, and when this is a comprehensive financial plan, tax planning is just one part of it, in addition to an investment analysis. When you get into investment planning, estate planning, of course a comprehensive financial plan, so I can show you what your financial future looks like based on the things you're doing today. I can show you what your finances are going to look like 5 years, 10 years, 20 years down the road, and show you whether you're going to run out of money based on what you're currently doing, or what the risk for that might be, or having to cut way back on your lifestyle. Who wants to do that, right? We want to expand it, if anything, and enjoy those years in retirement. So if you'd like to have a personalized plan just for you, be one of the first 10 callers to my office, 615-376-5325. Tessa's there. She'll get your information. She'll send you out a checklist of things to bring to your appointment with me. And when you come in to see me, I'll give you a free copy of my book, 7 Steps. I know, I'm like 10.
He's already working on a new one.
I'm right. Here comes the new book, 10 Steps. 7 Steps to Financial Freedom in Retirement. All right, we're going to delve into this a little bit with regard to, have you had anything that really sticks out there that,
Well, a couple things. One that would probably affect many people will be the capital gains, right? So under the new one, the qualified dividends, which is no longer going to go with your ordinary income tax rates, right? Mm-hmm. So they're going to be locking them into the 0, which we love, right? So if you go out and you clean up your finances and you say, I'm going to go sell 25, and it keeps you below your income. So for an individual, $36,600 or less, you'll pay 0 tax on that capital gain. So if you go sell a piece of land and you make $10,000 and your income stays under that 36, there is 0 capital gains, which is awesome. For a married couple, $77,200. Now we've had that on the books. It's still on the books. Then the next is the 15%. So from the 36 to 452, which is a bigger hike than we've had for an individual. And for a married couple, this is where the penalty comes in, as far as I'm concerned. 77 to 479. They don't double it, right?
You're not getting the same benefit.
So then you jump into the 20%. Well, again, keep in mind, this is for your long-term capital gains, which we've had those, but they've changed. So a lot more people in the middle income bracket are going to hit the 15% than we've had in the past.
Well, understanding too the way that the capital gains work. So if you have a large capital gain, maybe you sold some property as an example, and we're going to throw out some examples of cases that we've worked with and how the differences may be there. But capital gains is an example. If you have a large capital gain, it could push you into
a higher bracket.
So this is one of those areas. Let's say you're selling a property as an example. So if you're selling a property and you're going to have a large gain, now I'm going to say it's an investment property in this situation. It's not your personal residence.
Correct.
And we'll talk about that a little bit as well.
Yeah.
Right? But if you have an investment property, or maybe a second home, vacation home, that kind of thing, and you sell it, let's deal with the investment property, because this is one of those areas we can talk about 1031 exchanges as an example. So there's a strategy where you're going to sell property, and we've had a couple recently where they've had gains of, anywhere from 700 to $700,000 to $1 million.
Easily, yeah.
So in that case, well, guess what that just did? That gain pushed them into that upper bracket, so where they're now going to pay 20% tax plus an excise tax of about, what is it, 3.8?
AMT.
Yeah,
And then you have
AMT
the
triggering
AMT will most
potential.
likely be triggered as well.
So you're going to end up the shadow system. AMT, by the way, in the new tax code's been changed a little bit so that it will affect fewer people. In this scenario, I'm not sure yet that it probably would still affect you. But here's what you're looking at. Because of the way you took that gain, you just ended up with a huge tax. All right. Now let's say that you did a 1031 exchange where you purchased another property, another investment property. Now you can offset all that gain if you buy a comparable, in other words, price property, or you can offset some of it if you bought a lesser property. All right, but understanding again, I would be looking at that tax, because the difference between, say, a $450,000 gain keeping you in a, or 450,000 income. So let's say
yes.
maybe depending on what other income you have, deduct that income from what gain you're going to realize, and you want to stay down in that 479 or less range,
right, so
that you're not going to have to worry about bumping up into that 20 and kicking in these other taxes and keeping it at a 15% tax. All right, that's a huge difference. I mean, in this situation, again, if you add that up, that 15 jumping up to 20, or then and then adding in the excise tax, all of a sudden you're talking about a 65% increase in your taxes. All right, so, on a gain of that magnitude, you're going to be talking about 100,000 versus maybe 25,000 as an example. It can get even more, in other words, multiples of that out.
And the secret to that is, to be quite honest, is coming in or talking to your financial planner as well as your tax person before you make any choices.
Ideally, yes. And we're going to talk, but if you haven't, then we're going to talk about some things to do there as well. First, though, we're going to take a break. And then we're going to delve into this a little more and how it might affect you when we come back. Join us here. We'll be right back on the Retirement Report.
This is